All right, everybody, welcome back into Mining Stock Daily, heading up to the Abitibi here with an update from our friends at Cartier Resources. They do trade on the Venture Exchange with the symbol ECR and with a relatively new OTCQB ticker with ECRFF. The company has published kind of a mid-year review here, and so we're going to take that video, which you can find on their website, to follow up on, but also kind of expand on the conversation here today with CEO Philippe Cloutier. Philippe, good to have you back. It's been a while.
Yes, hello, Trevor. I hope you're keeping well and your summer is exactly how you wanted it to be. Because over here it's hot.
It is very hot in Colorado. I'm trying to summer as best as I can, although work continues to keep me away from from the golf game, I guess you could say. But I'm here with you today. Always a pleasure. But let's maybe jump, kind of piggyback on that mid-year review. Again, the video provided on your website. And I think obviously it's clear here, Philippe, and you and I have had this conversation in months past, but you're not looking at Cadillac as a single deposit. You are seeing this as an emerging gold camp. So if we take this last 6 months, that mid-year, what have you done? What's the company accomplished to really bring more confidence to that idea?
Well, listen, a dozen press releases on the tail end of that massive 100,000-meter drill program that we launched late last year. And remember, the objective of the program was specifically, as you mentioned, to demonstrate that we're dealing with a mining camp or, a cluster of mines on this, this big land position that we have on the prolific Cadillac Fault. And right out of the gates, what we basically say in this mid-year review is right out of the gates, with only about 35% of the project of the drilling done, we've concluded, or we've met that objective with 4 different zones that can really change the entire game here. Now, the zones are the contact zone, which is 5 kilometers northeast of the main resource block. I'll get to that. And that thing is showing through historical geophysical surveys and previous drilling that it extends over a 4 to 5 mile stretch, even further to the east. And then right off to the west of the main mine area, there's a ramp portal that had been initiated in the 80s, and that area is also showing some really high grade different styles of mineralization. And right around PDAC this year, where we stumbled on a massive discovery. So all of that basically points to, hey, wait a minute, we have to sit down and re-engineer this program. We have the original program that is set to continue, but we also have to, put pen to paper and imagine what a standalone program on the contact discovery would look like and what that would bring and how much that would cost. What a standalone program on the portal area would look like, what that would bring and what that would cost. What a standalone program on this vast, huge Hope target area would cost and what it would bring. And then obviously there's the main resource area that is of obvious concern to us, because remember, we did a PEA in 2023. We used a gold price of $1,750 then. We had a resource of 2.3 million ounces of gold. We were building our own mill, and we were using the historical metallurgy of the past producing mine, which was 93%. Now, you flash forward to today, and you have a totally different gold price environment. Gold is trading north of $4,000 US. We have a new expanded resource of 3.2 million ounces, an additional 1.1 million ounces. Then we've also received the metallurgical test results. So now we're dealing with 97% gold recovery. And finally, well, there's 5 or 6 mills along the highway. And so we're now considering toll milling scenarios. So not only do we have massive blue sky exploration that we have to reassess and rejig the program, but we have this PEA that we're we're due to put out maybe in the next or well, early September, October. So
Mm,
and that's going to, provide a Polaroid, a snapshot of the new economic metrics of the project. And and so yeah, that's basically the mid-year review. And where we're going from that, well, it's obvious that we're transitioning, right? We used to be exploration. We're absolutely advanced exploration on the cusp of delivering a sub-shovel ready development project. And so we need to really think about the strategy of where we're going. And with north of $5 million in the treasury, well, it's a great time to be paper engineering the path forward, right?
sure. Does that put a pause on the drill program here, Philippe? Can you clarify
Yes.
that? Because it
Yes,
has
yes,
been kind of quiet.
yes, there is a pause on the drill program, simply to rethink the whole thing,
Hmm.
and then assess where we're going with that. Because it is obvious that we're going to continue building value through drilling, but then we have to assess how that's going to be offset by the dilution. Should we want
Yeah.
to raise the massive amount of money to do that, right? Um, and right about this time, we've seen a certain level of M&A uh, happen in our industry where mostly the cash flowing projects were taken out by seniors. And now people are moving down towards the projects such as Cadillac, such as, what Cartier has outlined. And I'd like to remind your audience that just in the last year and a half, a South African company, Goldfields, bought out Cisco Mining. A company operating in North Africa, Orezone, bought the Hecla deposit, the Casa Berardi deposit, the operating mine. And then Fresnillo, a Mexican company, took out Probe Gold. So foreign money and foreign entities are being attracted to this jurisdiction, and rightly so. I mean, when one lands in Val-d'Or and sees the mining camps of Val-d'Or and Malartic, and they see the mining contractors, the qualified workforce, the infrastructure, it's obvious that this part of the world is pro or is friendly to the business, the industry of mining, and so where we need to assess where we're going with this and
Hmm.
reward our shareholders as rapidly as possible. And so part of the transitioning is getting our story out there. The OTCQB listing that or trading that you mentioned that's recently part of Cart's activity is to make more inbounds into the U.S. We've done road shows out in New York. We're going to New Orleans, perhaps Denver and Beaver Creek shortly. And we're going to continue going to Europe, and we're also making inbounds in Asia. So it's exploration, providing an updated PA and telling our story to the audience.
Yeah. No, absolutely. Okay, so this is a pretty big pivot for the company. It
It
is
is.
more of a de-risking type scenario, working on the economics of Cadillac as a camp. The PEA, Philippe, I mean, you've been in the game long enough to know this is a snapshot of what a potential mining situation could be for Cadillac. It's not necessarily what it ultimately will be because there'll be more, obviously, down the road here. But I also know you are one of the best in the business at taking a treasury and holding on to it as tightly as possible, fighting dilution and not just spending it willy nilly. So you think the risk reward here is better attuned to capital allocation towards a technical report than it is continuing the big drill program that yet to come
Well,
following.
absolutely, because if it's not like right out of the gates we hadn't, our drill program was hit and miss. No, no, no. The
Right.
very first four targets that we aimed at, they reported above expected results. And so we can only conclude that the seven additional targets will have the same success. So not only do we have the original program ready to continue on, but we're also designing specific programs for these four new discoveries. Now, that's the first thing. The second thing is, you know, we bring to the table a project, a project that is ready for this specific type of market. And yeah, $5 million in the bank is something that we want to keep a hold on. And
Mhm.
moving forward, we have the optionality. We could either continue drilling, and that's the easy part. But when we deliver a PEA, a lot of people, give that a certain level of acceptance. But when you're in a mining camp and your big brother or your largest shareholder is Agnico Eagle, and you have surrounding other mining companies, you don't have as much wiggle room as if your project was remote or you didn't have any strategic investor. I mean, some PEAs do take on a level of credibility or reliability that is much higher than is being, it's almost like a pre-PFS, right?
Yeah,
So
right.
so we're quite happy with that. And I think the next things that our shareholders are looking for is that economic snapshot. And listen, there's right now it's not that it's overly complex, but there's various economic pathways that the engineers are looking at, and that's one thing. And then who's the audience that you're publishing it to? The senior mining companies, the junior and intermediate mining companies, or the retail market. So it's not only picking the the economic the best economic scenario for developing this thing short, medium, long term, but it's also landing it with the right audience that will give you the biggest bang for your buck, that will spell the biggest value for your shareholders.
Right. Since you last spoke on the podcast, you had a sit down with Ian at the Deutsche Gold Mess. I think that was the last time you were on. But since then, you have published new drill results with a headline hole of just over 19 meters of 2.1 grams per ton gold at the main sector. But that confirmed multiple parallel near surface gold zones.
Yeah.
Very positive. And, I think a lot of people would like maybe expect more drilling to follow up here. And so I'm just kind of curious, since that time, Philippe, what was the aha moment, or what is a single news item or conversation with the board or your shareholders that really caused you to maybe sit down or sit back, pause, and rethink the next 6 months, the second half of the year?
Well, there were several aha moments. The one of the first aha moments was when we're seeing some of the initial internal scoping study analysis being done on the core of the resource block. And then parallel to that is considering all these new discoveries that will not be included in the because yeah, in the next PEA. And they so this obviously is going to continue growing. The biggest aha moment, I think, was stumbling upon a type of mineralization south of the main mine area, the past producing mine that we have, that is my goodness, it's reminiscent of what Agnico is mining at Canadian Malartic and Odyssey, and that system is
Mhm.
reputed to have 20 million ounces of gold. Now, it is very, very early days. I would hate to arm wave, but as a geologist, we like to see the ingredients, the porphyritic intrusives, the sediments, the gold, uh, all the ingredients that have to show up in a recipe to make it, you know, to make it a mine. And we're seeing that on the Hope target. We're seeing that on the main target, which is obviously going to be the object of the PEA. And then there's the portal and the contact. So there's a lot lined up in the fall, to reward our shareholders, and that's what we're feverishly working through this summer on reduced personnel because people like to, take their vacations. And there's also the contractors are far and few because they're working on a lot of programs. Plus, I did mention it was really hot. There's forest fires roaming through,
Mm.
ravaging through the countryside these days, and so a lot of areas there's a ban on going into the bush and working. But all that said and done, exciting times for Cartier and other junior companies, and be on the lookout for this
Sure.
this fall. That's going to be real nice.
Yeah, it's almost as if you get most of the better work done in the fall, winter, and spring months because the summer it's almost
Yeah.
you have to shut down shop with the forest fires anymore. I think the
Well,
number of years you and I have chatted every year, it seems like a lot of times you're just really on the
well,
risk of that happening.
it was bad in 2023 simply because the government or the organization that takes care of forest fires here, they dropped the ball, and then all
Mm,
hell broke loose. And this time around, it's not that bad out there, but they're not taking any chances, right?
right.
They got sent to the penalty box the last time, so this time around they're saying no, they're overly cautious, and that's fine.
Okay.
We're complying with all the rules and regulations.
Yeah, very good, as I assumed you would be. Last question here, Philippe. Obviously, you've mentioned Agnico Eagle's strong relationship with them internally, with their shareholder of the company, but also being very close proximity neighbors to the Cadillac project. But has that relationship at all influenced the way Cartier is advancing Cadillac now?
Um, Somewhat, yes, because they have mills to feed, right? Just
Hmm.
like El Dorado, West Dome, and you take Fresnillo, for instance. They bought Probe Gold, and they have to build their own mill. So they're throwing a monkey wrench in the established mill capacity in the area. Agnico Agnico has the Goldex mill, the Canadian Malartic mill, and the LaRon mill. And so they're juggling, and they're thinking forward, 5, 10, 15 years. And they've said in many of their meetings they have a strategy to feed the mill. Well, Eldorado's like that, West Dome's like that, Fresnillo's coming in, and so yeah, they do influence somewhat because I did mention that we're considering toll milling, and
Hmm.
that's going to have to the effect of really squeezing and lowering the capex on a project such as Chimo and Cadillac, and freeing up a lot of upside, right? Because theoretically it shortens the permitting time and the environmental scar, and theoretically it just gives you a bigger, much leeway for a bigger MPV and smaller capex.
Right. Okay. All right, Philippe, thanks so much for the update. Again, go check out that mid-year review video on the Cartier Resources website. And then also, obviously, we'll be touching base as these technical reports are published to the market later this fall. Always sounds like somebody teeing up a Beaver Creek Precious Metals Summit special. A lot of news releases, typically mid-September around that time. I'm not going to say that's what Philippe has up his sleeve, but sometime around that. So I'll say that. All right, Philippe, thanks so much. Good to see you, man.
Thanks.
That's your update from Cartier Resources, everybody. Again, trading on the Venture with ECR and on the OTCQB with ECRFF. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.